This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Stock markets are roaring after the US Fed rate cut, many including Wall Street powering up to record highs. And interest rate curves are steepening. But first, the actual number of people making initial unemployment benefit claims in the US dropped from the previous week to 185,000 last week, significantly lower than the expected 230,000 and a 4-month low. There are now 1.68 million people on these benefits, also a decrease. Meanwhile, the Philly Fed Factory Survey reported improved conditions in the Rust Belt states in September. Although the new orders component didn't rise, the sentiment indexes for the futures all did. But not rising is their real estate market. Existing home sales fell 2.5% in August from the previous month, the fourth decline of the year. It was down 4.2% from the same month a year ago. The fall happened despite the drop in mortgage rates in the period. And the median existing home sales price fell too to $416,900. The inventory of unsold houses rose to 18 weeks of sales at the latest rate, rising from 15.6 weeks in the prior month. But one thing the Fed rate cut did was suddenly drop home loan interest rates, falling more than 25 basis points in the first day to 6.09% for their benchmark mortgage. That is likely to go sharply lower again tomorrow. The US current account deficit widened slightly to 3.7% of their GDP in the second quarter of 2024. That is entirely manageable for them, especially as the US dollar is still the world's reserve currency. For comparison, the New Zealand current account deficit is running at 6.7% of our GDP, and we are certainly not a reserve currency. Overnight, there were central bank rate decisions in both Taiwan and England. Both made no changes. Perhaps the Taiwanese one was a bit of a surprise because they tend to follow the US Fed's moves. Later today, Japan will also review rates, but no change in their rate is expected either. But markets will be looking for signals about when their next rate rise is coming. Will the start of the rate easing cycle trigger an economic upside? Certainly some commodities markets think so, and they also expect China to come to the party soon with new emergency stimulus, which will be another boost. In Hong Kong, a man was jailed for 14 months for wearing a T-shirt with a protest message. In Australia, their number of workers without a job fell by 10,000 to 627,000, or an unchanged 4.2% of their workforce. Even though employment rose by much more than expected, up 25,000, the number of new part-time roles rose by 47,000 and the number of full-time roles fell by 3,000. Almost 31% of all Aussie jobs are now part-time. In New Zealand, it's barely touching 20%. The overall jobs growth in Australia has analysts thinking that the RBA will delay any move to cut rates anytime soon. But a rise doesn't seem to be on the cards either, despite their outlier sticky inflation. And container freight rates fell another 5% last week, taking them back to where they were at the start of the year. But they remain 180% higher than the average 2019 pre-pandemic rates. The Panama issues are resolved, but the Red Sea Suez issues are not. The shipping industry is adjusting to that new reality, however. Bulk cargo rates fell 3.6% last week and are now themselves 30% higher than year-ago levels. As we all know, for both, there has been a lot of volatility in between, and that volatility has probably not ended. The US Treasury 10-year yield is now just on 3.73% and up 2 basis points from this time yesterday. The key 210 yield curve is now 14 basis points positive. And Wall Street is surging today, with the S&P 500 up 1.8% from yesterday after the Fed decision. Overnight, European markets were all up too, and with varying enthusiasm. Tokyo ended its Thursday trade up its own strong 2.1%. Shanghai was up a more modest 0.7%, but Hong Kong closed up 2%. Singapore was up 1.1%. And the price of gold will start today at $2,589 an ounce and up $14 from yesterday to a near neutral all-time high again. And oil prices are up $1.50. It's $72 a barrel in the US, while the international Brent price is still just under $75 a barrel. And the Kiwi dollar starts today at 62.5 US cents and up 10 basis points from yesterday. Against the Aussie, we're down 20 basis points at 91.6 Australian cents. Against the euro, we're up 10 basis points at 56 euro cents. That all means our trade-weighted index starts today at 69.9 and up 10 basis points from yesterday. And the Bitcoin price starts today at $63,817 and up another strong 5.6% from yesterday. Volatility over the past 24 hours has been high, at just on plus or minus 3.6%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.